Welcome back to Ticker Trader News Daily. Today we break down the Federal Appeals Court's landmark ruling striking down most of the Trump tariffs, what it did, what it didn't, and how markets in both our world and the one we mirror are set to respond. A 7-4 Federal Circuit ruling declared most of the Trump administration's IEEPA-based tariffs unlawful. These were the broad reciprocal and trafficking tariffs. Importantly, the court left them in place until mid-October, giving the administration time to seek a Supreme Court stay or appeal. Tariffs under other statutes, like Section 232 steel and aluminum, remain untouched. So, not all tariffs are gone, but the legal foundation under some of the largest has been cracked wide open. This matters because the court affirmed that Congress's Trade Act Section 122 caps, 15% for 150 days, can't just be bypassed with IEEPA powers. That goes straight to the heart of U.S. trade authority and the costs baked into supply chains. The near-term market impact? Winners of the ruling hold include import-heavy retailers, consumer discretionary names, industrials, semiconductors tied to global supply chains, EV producers, and even emerging markets linked to U.S. trade. Losers include protected domestic producers, steel, aluminum, and basic materials. If a Supreme Court stay is granted, enthusiasm cools, and moves become headline-driven until a decision is final. What are the administration's options? They could appeal to the Supreme Court, pursue partial rollbacks to comply, reissue tariffs under other statutes, or push for congressional action. Each path has unique timing and political constraints. Here's how it can unfold. If the Supreme Court grants a stay, markets pause, domestic producers stabilize while importers cool. If no stay and an unwind begins, risk-on surges. Retail, semis, EVs, and importers rally. The dollar drifts lower, and the Fed finds a small disinflation tailwind. A narrower workaround creates sector-specific noise. A congressional path creates headlines but little immediate clarity. Our analysis, a multi-asset entry window, is opening. Semis, industrials, and retail look like strong buys, while domestic materials and the dollar trade more like holds. Strategy going forward favors AI semis like NVIDIA, SMCI, and Micron, along with retail, EV supply chains, and even crypto miners that benefit from disinflationary flows. The tariff strike is more than a legal technicality. It's a foundational shift in U.S. trade policy. The next 6 weeks hinge on whether the Supreme Court freezes this ruling or lets unwind momentum carry forward. Either way, AI, semis, and trade-sensitive sectors are positioned to lead September's opening moves. That's it for today's Daily. Disclaimer: this podcast is for educational and informational purposes only. It is not financial advice or a recommendation to buy, sell, or trade any securities. Please do your own research and consult a licensed advisor before making any investment decisions.